Hey everyone, Couch Investor here back with another video for today. Today's video I'm going to talk about FASTLY. A lot of you have asked me to cover FASTLY weeks or months or so ago, but now that I actually bought into the stock, I thought this would be a better time to make this video. We're going to talk about why I bought into the stock, what I plan to do with it. Do I plan to hold it for the long term, or is this just a short-term play? We're going to look at the graphs and then cover some news on why the stock actually dropped more than 30% in the last couple of days. But before I get into this video, we're almost at 3,000 subscribers. So if you haven't subscribed yet, maybe now is the time to hit that subscribe button. And if you like these videos, maybe leave it an early thumbs up, as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Right, so first a small introduction for those of you that don't know what FASTLY is and what do they do. So FASTLY is a content delivery network, meaning they deliver content for various companies as fast and as secure as possible. Here we can see some of their customers: Shopify, Spotify, Microsoft, Azure that is, and even Pinterest. Pinterest is not on this list, but I know Pinterest is one of their major customers. So basically, instead of having one server, let's say in the United States, and me as a user in Europe, having to wait, let's say 120 milliseconds or so for the content to appear on my browser, they use servers all around the world to reduce that lag, let's say, to around maybe 40 milliseconds or so, and it reduces the traffic on the original server that is, let's say, in New York. That way traffic goes as smooth and as fast as possible. There's no lag, there's no delay, and you get your content delivered to you as fast as possible. That's FASTLY's job, and you can see that a lot of big companies are using that, because there's no way I would like to go on Spotify or let's say on Pinterest and scroll and look for a song and having to wait that extra second or two for my content to load. All right, so now that we got that out of the way, let's look at the graphs real quick. Let's look at this crazy graph from this year. We can see at its lowest point, it was at around about $11 or so. At its highest point, which was very recent, it was at $116, $117 or so, which means that you could have 10x'd your investment in just a couple of months, which is insane actually. So for those of you that have bought FASTLY very, very early, well done, very well done actually. And you should not even think about selling right now because it dropped to $80. You might sell for some profit. That's obviously every time a very good strategy to take some profits, maybe even take your initial investment. That way, if the stock keeps getting lower and lower, you could eventually add more and more from the money you've initially bought into. Now let's look at the recent price action. We can see here it went up, then back down, bounced off the $80 mark or so, went back up again a bit, bounced off the $80 mark, and then made its way all the way up to around $116, which is their top. And then earnings report. The stock opened the next day 21% down. That's why you see a huge gap right here. The next day, the stock went down even more, and now it's right around the support line at around $80, $79.33 to be exact. Now let's say you start buying at $80 right here, and it makes its way up all the way to $116, $117 again. You will make almost 50% on your investment just because of these harsh reactions right here after earnings report. The reason why the stock went down so fast, so much, is because of the report saying that 12% of the revenue came from TikTok, and most of you know right now that TikTok might get banned in the United States. And if it does get banned, then that might mean that 12% of their revenue will get wiped off their balance sheets in the near future. But I'm going to talk about that just after the charts right here. So I bought in at around this price right here, $87, and right around here at $81 as well. If it goes back lower, and I think it might maybe go back lower, but if it does go lower than $75, we might see it go all the way down to $70. You see a big green candle. That usually is a very good sign, and I think that should hold for sure in the long term, right around here, $70. If that happens, I will be buying again at $70, but as of now, I'm quite happy with my position. If in the next couple of days it continues to stay at $80 or so. I might add a little bit more so that my average buying price decreases. And then when it makes its way up back to its all-time highs, I might actually sell some of my position and take some profits, and then let the rest do its job in the longer term. But I would like to use that maybe around 50% gains to buy more Square or Tesla stock along the way. All right, so we've just seen a huge crash in the last 2 days for FASTLY. Like I said, I bought in at around about $86 or so, and then again at $81, and I will keep my eyes open for further drops next week. If that happens, I will keep on adding until $70. Then if it drops even more, I might even reconsider my position, but let's see what happens in the next couple of days. All right, so let's get back to the TikTok story. Basically, TikTok accounts for 12% of FASTLY's revenue, and people got scared because let's say TikTok gets banned in the United States, that means that 12% of their revenue gets wiped off their balance sheet. Now, in my opinion, the reaction was very, very harsh, because at the end of the day, that 12% will probably come from somewhere else eventually. FASTLY is still growing and growing very, very fast. They've actually added more and more customers in every quarter in 2020 and in 2019. So yes, at first in the short term, that 12% might hurt them maybe in their next earnings or so if TikTok gets banned. But let's say it does not get banned, you just got a stock at a 30, maybe even 40% discount. Now let's say Microsoft buys TikTok, there's still a little risks that Microsoft might be delivering TikTok's content through their own cloud services and not use an outside source like FASTLY. But like we've seen, Microsoft is a customer of FASTLY, so they might still continue and be using FASTLY services because it's already integrated in their infrastructure, so why not? Microsoft buying TikTok would mean that those 12% will maybe and most likely be increasing each and every year. Obviously, that 12% might become 10%, but the amount spent on FASTLY will remain the same or will grow more and more. As FASTLY gets more customers, that percentage in revenue will be decreasing, but the amount of cash generated from TikTok might be increasing. So like I said, you will get FASTLY at a huge discount, but take into account that if Microsoft does not buy, or let's say Apple or Twitter, as reported today, Twitter is in the game to buy TikTok. I hope this never happens because, well, there goes free speech. Now, if TikTok gets into the hands of a US company, that will be great for us investors that are just buying FASTLY, or long-term investors. That would be great. It would be great for Microsoft as well to actually finally have a presence in the social media world. They've done a great job with LinkedIn, a super job actually with Minecraft. If you wanted to do a short video on why I think Microsoft should be buying and be all over that TikTok deal, let me know down in the comments below. But as of now, I'm buying FASTLY because, well, I think the stock is on sale. There's still a risk that it might go lower, because if the deal does not happen, investors will be even more negative and pessimistic about it in the short term. But in the long term, I think the stock will go back to its all-time highs. So that means that I get a 40 to 50% gains play just on that trade, let's say. All right, so to conclude, why did I buy FASTLY? Well, in the short term, for that little play of 40 to 50% gains, if the Microsoft deals happen, or if another company in the United States acquires TikTok, the stock will go back up very, very fast. But if that deal never happens, then suddenly that investment turns into a long-term play, because I really think that even without TikTok, FASTLY will keep on growing year over year. So that would mean that the stock will take more time to get over that $100 mark and eventually break its all-time highs, maybe at the end of the year or so, when everybody would already have processed that TikTok scenario. But yes, as of now, this is a short-term play, and I really hope Microsoft gets that deal done, so we investors in FASTLY can be very happy in the short term, and obviously happy in the longer term if you plan to hold it in the long term. And that's it for this video. If you liked it, consider leave it a thumbs up, and if you haven't subscribed yet, maybe now is the time to hit that subscribe button. I hope this clears why I bought FASTLY. I will be keeping you up to date if I suddenly sell my position in FASTLY or if I change my strategy or so. Now, like always guys, take care, stay safe, and see you all in the next video. Bye bye. Bye.